Hi, I'm a full-time working dad that is busy all the time working and trying to do the best for my family. I am also a trader and an investor, and in this channel I show to you how normal people like myself, who are busy with family and busy with work, invest my money for the long-term future to make a better future for my family. This channel is not about all the BS that are out there on YouTube that will tell you all sorts. This is real, and I've been doing a Trading 212 series now for quite a long time, where every month I actually realistically show you some of the trades that I've been doing, some of the things that have not happened too well and gone wrong, and that's just the way it is. I don't hide anything from you then as far as the trades, and when it goes wrong I have bad months and you can see it all for real. And this is the journey, this maps the journey into how it really is for people, for normal people who haven't got thousands and thousands of pounds to invest every month. This is reality. I invest what I have left at every month after paying my bills and paying for the family, etc., into the stock market and hopefully making a better future for myself and for my children. Okay, so let's go check it out. Okay, so this is my Trading 212 overall chart picture. My portfolio. It currently sits at minus 16.7% down, so it's still in the red and it's not doing great at the moment. At start of the month, which was start of April, end of March, it was minus 13, so it's got worse and it's gone down a bit more over the month of April. There are certain factors why some of what's contributed to this, and I shall go through them. But a lot of people are also portfolios are going to be showing red. A lot of people at the minute, our portfolios are down. You're not the only one. I'm not the only one. There's plenty of people out like this. There's going to be lots of people that are telling you, yeah, they're up every single month. They're just basically, I just think it's just BS. They're just talking rubbish. Most people now are feeling the pain because of the market. It's all normal, it's all natural, and hopefully the soonest will come to an end. But if we look at the S&P 500, about a month or so ago, I put a picture on of the S&P 500 chart, and I drew a line around the 4150 mark, where it came down, hit the line, and it again rebounded back up for a short period. But in the last few weeks, it's come back down and hit that line again. It briefly went under that line for about a day, a couple of days ago, but it's just slightly back up above that line again. So that's why the market's come down again. Where it goes from here, it's difficult to say. It could rebound back off that line again and go up, or it could go down further. That's still a possibility. Not really sure yet. We shall find out soon enough. It's hard to tell. I mean, no one's got a crystal ball as much as these people on other YouTube channels will tell you. They know exactly what's going to happen. It's not true. So we shall see what happens. Similar with the Nasdaq. I mean, the Nasdaq has took a pasting. The S&P 500 has never got into a bear market yet. It's never dropped more than 20% from its high. But obviously the Nasdaq did, and it dropped over 20% from its high. And the Nasdaq, which is far of the tech stocks, really heavy on tech stocks, has really took a pasting this year. And that is why a lot of the big stocks are down, like your Facebook, which is Meta, your Google, people like that, Apple. It's all up and down because the tech stock industry is suffering at the moment, and that's why that's pushing a lot of the market down. I also like to keep an eye on things like the fear index as a chart, and at the start of the month it was only at neutral as far as fear, but in this last month it's now in the fear category if you look at the dial, and it's going really, really close now to the extreme fear, which is people just panicking and selling and fearful of the market. And to me, this is a really good thing, because this is showing me that there's great opportunity out there in the market now, where people are just selling in panic, which is the worst thing you can do. And now they're pushing the prices down, and this creates opportunities. This has to be with really, really good stocks, with good companies, strong companies with good balance sheets. But this is producing opportunities now where these stocks are really quite cheap and are perfect for buying. It also shows as well, with so many people selling. It's an indication, I think, if it gets to extreme fear, then that eventually will sell out most of the people that are panicking and get rid of all those people. And then when it's got rid of them all, then it will turn around and go back up. So I don't think we're a long way from seeing the stock market rebound back up. maybe just in a few more weeks, maybe going down into extreme fear just to get rid of even more people, the weak-minded people that just can't hold their investments and are panicking. It will get rid of them, and we shall see go back up, I believe. So now we'll look at my current portfolio and what positions I hold in the portfolio. There's been a few changes. I've had American Express, which I bought back at the COVID crisis time because it was so unbelievably cheap. I decided now was the time to sell out on that stock. I've had it now for quite a long time, and I sold it at 120% profit. So I'm really quite happy with how that turned out. I decided to cash in on those gains just to generate more funds to put back into stocks that I believe now are quite cheap. So I did get rid of American Express, was the only one I got rid of. The new stocks that I decided to buy into were Adobe, PayPal, which were two, I believe, really undervalued stocks. Adobe's a really great stock, and I think when you look at the financials, they're a really good, profitable company, and it just seems really cheap to me. I think these stocks that no one are interested in and no one likes at the moment. And when I look at people like Adobe, I think it's just too cheap, so I'm willing to put my money into Adobe. PayPal, similar, that's just dropped massively from where it was 12 months ago. I don't think PayPal is that bad of a company, and it's one of the biggest companies out there as far as online digital sort of payments and banking. It does have some competition out there, but I just think it's way undervalued at the moment. So that's why I've decided to take a small position in PayPal as well, with the long-term future of seeing that going up. I've also taken a small position on Boeing, and people are going to be like, what? What do you mean Boeing? There's terrible stock. Boeing is unbelievably low at the minute with everything that's gone on with the problems with the passenger planes and stuff like that. They've really plummeted through all these different reasons. But that's not just their only business. They're also a big military arms producer, plane producer. They do lots of, obviously, military planes and vehicles and stuff like that. There's a lot going on in the world at the moment, a lot of defense spending, and Boeing will have a lot of uplift from revenue from more jets and planes being needed to increase the world's security and air defense, etc. So that appealed to me. Again, I think all the problems with these planes that they're having, they will eventually get them sorted out. And at the moment, because Boeing is just so cheap, I'm prepared to take a small position on Boeing with a long-term view. I mean, it's going to take a while, but I think eventually the stock will go back up. So that's why I've taken up on Boeing. It is a risky one, I know, but Boeing's still a big name in the world industry of sort of aviation. And I think eventually they will sort everything out and produce good planes again. And it might take a while for the market to go back and sort of trust their airlines again and trust the make of the planes. But I think will eventually turn around, and that's my hope with Boeing. I've also added just a small positions of dividend stocks. One was Suru Capital and one was Vail. They both provide really quite big dividends. So I just wanted to put some dividend stocks in, especially with all the inflation stuff going on. Then at least I can get paid a bit of dividends while we go through this period. So that's why I've added those two stocks. But generally overall, there's a lot of red in my portfolio. Obviously the normal players, my biggest positions within my portfolio are Meta, which is still red, but there's been some good improvement with Meta in the last few weeks. Stocks like Google obviously is down. Obviously Alibaba is still down, although the Chinese market has had a slight improvement in the last week or so. Other stocks like Games Workshop is another one that is still down, and that holds a big position in my portfolio. I also obviously own the Vanguard S&P 500. That's also slightly down at the moment because the market is down. So yeah, there's still a lot of red. There's still a lot of good stuff in there. Obviously Costco's still doing well, people like that. So that's where we are on the individual stocks really at the moment. The other experiment I started, which was in January, was to create an all-weather portfolio to match Ray Dalio's idea of a portfolio that could weather any season. And at the moment, that is minus 7.5%. So it's gone down a little bit more recently in the last month. The commodity section and the gold is still doing well and keeping the portfolio up and protecting some of the downside from the rest of the markets at the moment. So it's faring fairly well. I mean, 7.5%, 7.4% is still a negative number. Obviously, it's heavily in the world stocks index and obviously the bonds market. And the bonds has been suffering as well quite a lot lately, and that's what's really dragging that part of the portfolio down. So at the moment, it's just going along, and at the minute it's only 7% down. So we shall see as the year goes on how the all-weather portfolio obviously matches up with the rest of what's going on. At the minute, it's doing better than a lot of the S&P 500 and the Nasdaq, etc., and my own portfolio. So at the minute, yeah, the losses aren't so great, so it is sort of protecting that side. So we shall see as it goes on. Hi, well, I hope you got something from that and I really enjoyed the video. I'm going to go back to playing with my family and my kids, so I'll see you in the next one. All right, take care.